You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, and welcome to the Thursday edition of the Option Block. We are recording live from the world capital of all things options trading, that is Chicago, Illinois, home of both the Bulls and the Bears. And folks, I am not talking about the sports teams. My name is Mike TOSAW, aka Uncle Mike. I will be guest hosting today as Mark Longo is out on assignment. I'm actually broadcasting from lovely, sunny, scenic St. Charles, Illinois. And today, my partner in crime broadcasting as well from out on the beautiful shores of Maine. Mark says it's sometimes dark and gloomy, but whenever I've been to Maine, it looks pretty darn nice. I'd like to introduce my co-host for today, Mr. Andrew GIOVINAZZI.
Hello. I wonder, I got my mute button working right. I did it just for you, Mike. So.
I love it.
Actually, your intro was so good, I don't even know what we need Longo for.
Well, I mean,
if he didn't own the network, I would just say make you the co-host, make you the host every week.
I mean, I wouldn't mind being the host of my own show, but let's be honest, just being in the hot seat right now and seeing what Mark has to do twice a week and for all the other shows that he does on this network, I don't know if I could pull that off. The fact that he does what he does, I will tell you this, folks, it's a lot different in this seat. I think I've hosted this show maybe 15 to 20 times throughout the 1,000 or so. I don't even know how many episodes that we've done through the years. And it's a lot harder having to be the host as opposed to just being some smart mouth that says funny things and talks about options every now and then. But nonetheless, I will do my best today.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
Looking at markets, the S&P 500, you might even want to say it's slightly volatile with what we have going on today. I know just going back on the show for the last couple of weeks, we've been saying, 4,200, that's the mark. 4,100, 4,000, 3,900, that's kind of the mark now, it seems. As I'm looking at this, I'm seeing things that we're getting really close to the close of the 2020 market for the S&P, roughly around the 3750 mark for the S&P 500. We're 150 points away roughly from that right now. And we could lose a lot of where we have been. The NASDAQ, definitely in a bear market right now with the pullback that the NASDAQ has had. And we definitely have a lot going on. I mean, Andrew, what's lighting up your tape today?
Well, I was just noticing how low things are going. So you could say, you know, I think of 2021 as sort of the, how do we say this? A lot of, you remember like way back, they said they passed that tax cut. Congress passed the tax cut in, I think, 2017 or something. And they're like, oh, it's a sugar high, all this won't sustain and all this kind of stuff. But then you see like, okay, what do you call 2021 when the government's spending an insane amount of money, sending everybody checks, the Fed is actively using quantitative easing. The economy was recovering from the COVID. I mean, you have to be realistic. Things were, after about 3 months last year in 2020, like things were kind of starting to get, some states got back to normal very fast, but there was that reopening trade where we just got back to where we were before COVID, basically, right? And if you start looking at levels of stocks. So the Qs at the beginning of 2021, when the sugar high was going big, we're now, I'm looking at that. I think 305.25 is where we were, and we're now at 290 QQQ. So definitely below that number, without question. So now we've erased 2021. SPY, I think what's holding up SPY is you had this huge move up in oil stocks, which is helping a lot, and other cyclicals and stuff like that, retail. So some stocks have done very well last year because they had booming earnings growth, and the market had kind of beat them down because they're all buying tech. And now I think everybody's hitting the exits on tech and some of the valuations. So you go back to what I would say let's call it, right before the election. I've got October. So the number for the Q is on the last day of October 2020, the Q was 266. So that's still 24 points to go. Apple, Google, all of the multiples, Microsoft, they have pretty high multiples for, and you've been watching the stock market for a while. I have never seen any sort of, let's just call it, mature company been able to maintain a high multiple for a long period of time. Amazon has definitely been the king of that, basically keeping 100 plus PE for 10 years. And the revenue growth was there, but now like the earnings are kind of plateaued after the COVID, and now it's kind of okay. It's a great big mature company, but does it deserve 100 PE? Or does it deserve a 50 PE? So it's like that's a much tougher one, growth wise. Maybe you can make a case for Apple, but Apple traded at a single digit 15 PE for years, and it's still 24 PE. So I mean, you get these like crazy things where those stocks doubled in 2021 and now they're coming off. Like Nvidia is another one that comes to mind. It's not that the companies aren't great, they just got overbought. There was too much money flooding into the system, and that's it. And where did they go? They went to the biggest stocks. So how far down they go, that is a good question at this point. So it would not surprise me for the Qs to see like 250 this year. Without any trouble at all. Trading 289 now. It would not surprise me to see the SPX like 3,500 this year. It's just, there's the second hand of all the stuff that was pumping stocks up last year, theoretically should be gone this year, right? So, the fiscal stimulus has to end. The government's actually showing a surplus, so they have to just stop spending. The Fed is finally out of the economy, probably a year too late, especially after the vaccines came along and stuff like that. And there was huge economic growth because everybody's going back to work. So I still think underpinning all that, what we'll call the great, it's kind of, like the great shell game. We moved the shells around and now everybody's just back to where they were in January of 2020 when the economy actually was booming quite strong. Federal receipts were strong, all that kind of stuff. I don't know if anybody remembers those days, but that's what it was like. Pretty much, economic growth, and then off the back of the Obama years. So you had kind of, you had steady growth. Government was still insane spending, but I think now the market is trying to see like those dollars have to stop flowing at some point. And we have rates at 3%, which was kind of that spillover point in 2018, December 2018, and now we're here. But the market is much higher than we were in December 2018. So I think stocks are going to have to adjust to this higher interest rate environment. They're going to have to adjust to the Fed not being in, and they just have to let the market go where it's going to go at this point. So I think that's part of I would call the big picture of where we are, just the reality of that situation. So and there's still plenty of companies that will do well, and the job market is still tight, so there's a lot of positives going on. But at the same time, it's like, where do we go when the government interference in the economy? And I have to admit, for the last 10 years, it's been pretty huge and unnecessary in my opinion, but it happened nonetheless. And I think that's where we are. So where do stocks go, right? I just think they get back to sort of regular multiples. A lot of stocks, like if you look at like Ford, or even if you go to some of the ETFs like the IBB, like all of the valuations of all those pharmaceutical companies are really low, like 8 PE, 10 PE, 12 PE. It's like none of them are hugely big. And a lot of industries where the multiples are pretty decent levels now. So the hammer that has to drop is all the stocks that everybody piled into. So and that is happening. So most of them are down 25 to 30% from their top. My guess is most of them will probably be at least 50% off their top. I think probably maybe the exception of Google. And I think that's where we are. So can the Qs get to 250 again? Sure. Absolutely. Most of the really small technology companies, the go-go growth companies, a lot of those are down 70, 80, 90% already. So, I mean, there's blood in the water everywhere. But it's just the big tech is the thing that, has not quite gotten smacked around yet. So we'll see to what extent that really, can push the indices down, and hopefully we get into like kind of a regular stock market. So today you have bonds up, stocks down, like that. Like
you haven't seen that in a while.
That used to be how it worked, where okay, we're going to get out of our stocks and we're going to get into bonds because the 3% yield on the bonds don't look so bad anymore. Except for the 9 or 10% inflation that we've got from literally 18 months of unlimited money, basically what happened. And I think the only thing that saved us really from going off a total cliff is the fact that Congress didn't really spend any more money in 2021 than they already did. Because then it would just be a ridiculous joke, right? Because we'd be pumping more and more money in, and gosh knows what the inflation rate would be. So, so I think we're getting back to some sort of normal market. Now, here's the thing: is where does vol go from here, right? So VIX
that was
is
going to be my next question for you, because right now with the VIX has been relatively steady in the low 30s. I mean, what's your take on that?
Yeah, I mean, but I think that's just fair for what's been happening. The SPX is still moving 3% a day intraday. That's almost a 48 realized vol per day. So VIX is fairly priced. The difference is the dollars kept going in there for those massive bull rallies, right? Those bear market rallies. And right now, like the bull case is not like that. The Fed's going to come in and save the day and we rally 3%, right? Unless the Fed's going to do that, I don't see how they're going to make that case. So I think as the reality of where stocks are, that this could just be kind of the year might be lucky to break even. SPX breaks even this year. That we don't have that massive rally. So I actually think this should be the start of a long secular drop in volatility for the VIX, because the reality is, as the reality sinks in of what the Fed can do, which essentially should be nothing at this point, they've got to start to fight inflation. They have to be serious about it. They have to look to be serious about it. That means there's a lot less upside for stocks. And when you take one direction out of the market, VIX could go down. So, I mean, I know it's hard to say, but even I think by like mid-June or July, we'll probably be in the teens again, because by then the picture vis-a-vis versus the Fed will be very clear. Like, they can't really do much, and just the economy is going to have to just get along on itself. God forbid any other these, Russian, Ukraine, or whatever these these issues are that don't seem to die, right? But that's the one thing I say that would hold the volatility up in the 20s still, is that this is still kind of those outlier events are still sort of waiting out there. But as we see right now, without the ability to really have that strong sustained rally, it'll be hard for VIX to see where it is. So I would expect it to start making its way back down to the 20s, into June, just because, where are we going, right? It's just things are just going to beat around here a little bit without any real leadership and equity. So I think actually vol should make a relatively long, a long way, a prolonged move down, actually.
Got it. And so from what you're seeing here, with the VIX, so let's say that we do go into a more channeling market. So let's say that we just kind of putter around between 3,800 and 4,000, and we just kind of just channel in that area. You could still see the VIX coming down, because then the market, there'll be more certainty in that of what the Fed's going to do, based on the more announcements that they'll have in the upcoming months. And then if we just kind of putter around for a little bit, that takes away the movement from the SPX. Or, I mean, it won't have as much movement every day. The fact that we've had a range today of nearly 100 points again in the SPX, peak to trough, is insane. But then by doing that, that ultimately leads to a lower VIX then. Is that correct?
Right. Yeah, those daily candles have to come down. And they just, like you said, today, 100 points is still, so volatility is not inaccurate. So I been telling my students, if you go to like SPX right now, the where's the at the money? Oh, so we're at 3,900. So the at the money straddle, the 3,900 straddle for the VIX, right? So the roughly 30-day straddle is like $265. So what you need to do is, you can't have a 100-point range per day, and that straddle will not come down, right? Because if you're going to move 100 points a day, a 30-day straddle is not going to go below 250. But what we need is, you need to see those candles go down before, that straddle really contracts. And like, to get VIX into the mid 20s, you need to see that straddle get down to like $200. And we're just not there. Today we're not there, because you're moving 100 points a day in SPX. So that straddle will just not get there. But your analysis was spot on, I would say, Mr. TOSAW.
I learned from the person who just said the real analysis 12 seconds before I said it. That's how it works. All right. Well, let's pay some things off here with some the most actives. And so as of about an hour before showtime, the most actives right now for the indices, the IWM, 439,000 contracts. And that's as of 11 a.m. Central. The average daily volume is 858,000, so we're kind of on pace for the average there. The SPX has 1.23 million. ADV on that is 1.94 million, so we might get a little bit above that today. SPY, the spiders, we're at just a little over 4 million. ADV on that is 6.8 million, so we might break that today as well. And then the VIX, 399,000 contracts that have been traded already. And then the ADV on that is 509,000. So we might be getting some might be getting a little bit more activity than what we normally get, but who am I to say what normal is these days? That's for sure. Most actives in terms of the equity options as of 11 a.m. Central. We have Facebook breaking into the top 10 with 260,000 contracts, 152,000 are calls, 108,000 are puts. We have Disney. No surprise with Disney post earnings. A lot of people closing out their positions. And before I go on with this, any thoughts on Disney right now, Andrew? Are any of your students trading Disney or looking into that at all with just the big drop that it's had from? It's like they had the excitement of streaming, and then now no one seems to care anymore because Netflix had a bad announcement a few weeks ago. I mean, do you guys have any people trading Disney or any thoughts on it?
We have. It's just that what's funny is like Disney was $190 stock, and now it's back to $100. So I think Disney's suffering from bad press. They kind of, whatever politics they got, instead of just making nice cartoons for people, they started to like inject some politics into it. And it's never, that makes it difficult for a corporation. They should just sidestep all the politics, to the extent possible. But as far as I look at Disney, it's about where it was. Again, like if you look at this is kind of at sort of not very far from the pandemic lows. I remember you could sell the 50 puts in Disney for like $10 during the pandemic. And right now we're actually really close to that level here. Let's see here. So yeah, the very low in Disney was probably $82. We're at 103. So, I think it's at a level now where it did rally pretty hard on it rallied pretty hard on the streaming plus, but now there's just massive competition in streaming. You have to be realistic. You have HBO, you have Disney, you have Netflix. I mean, it's going to be a competitive business, and they're like everything else, they're taking the multiple out. Like they put such a big multiple into these companies because they thought everybody's going to stay at home and stream and do it. And then now, like pretty much everybody wants to go out. I mean, you look outside, you look at restaurants, people are out again, just getting back to normal. And the valuations on these companies are getting back to normal. So, prior to, launching that streaming service, Disney it got up to about 130, 140 before, but it stayed around $100 for a long time. It's just kind of getting back to where it should be. So am I in a mad rush to get into Disney? Not really. I mean, it's not a bad valuation here, but it's still a richly valued stock. It's still 25 plus times earnings at this level. So I avoided it at 200. I avoided it at 170, 150, 120, except for selling some 50 puts 2 years ago. I haven't really, taken a look at it, but I guess it's on the list, but it's not there yet.
Not the top. Got it. Well, moving closer to the top of our list for most active equities, next we have Twitter at 291,000 contracts. Next we have Coinbase. Now, that's based on this crypto thing. What's it called again? It's
rhymes with coin.
It rhymes with coin. Bitcoin. What the heck is going on with Bitcoin lately? It's not doing so hot. I mean, any of the crazies in the option pit have any thoughts on Bitcoin lately?
I would say they're looking for, we've mostly tried to play like the Mara and Riot. The only thing I got, one of my students just sent me something about the hard to borrow and Mara is really high. So these are two stocks that are kind of Bitcoin miners that were, if you look at the charts on them, they're crazy, right? They went flying up, flying down, it was as high as $85 and now it's back to $10 with a lot of short interest in it. So we've mostly been doing it that direction, but I think Coin kind of said something where if we go bankrupt, we're not sure if coin holders will be paid, like their assets would disappear. I guess a Bitcoin is now an asset, right? So that caused some problems. And I think coin just sold off really, really hard after that, like crazy hard. So when I look at it, I think it got down to, where was it? Did it get to the 40s today? Yeah, it was in the 40s I think it was a $380 stock. So again, you're right at this thing where like a lot of the levels on these down 90%. It doesn't mean it can't go lower, but you're at that down 90% level now. Bitcoin's off 50%. And now you realize, eventually people will realize what you get with your Bitcoin and, what it is and where the value is and all this. But, ultimately it's still a bit of a Wild West. And it's hard to, it's not something I've really dabbled in. So I remember people talking about them when they were like $100 and $120. And then you had that Cyprus, when Cyprus, I think, had that cash crunch problem when they closed their banks, and Bitcoin doubled overnight, I believe, something like that. I'm like, wow, there's something to this, But then I'm like, oh God, I got to mine a coin. I couldn't get my head around trying to acquire one. So, it was like 10 years ago or 8 years ago, 9 years ago, and I just forgot about it after that. And the next time I heard about it, they were trading in the thousands, like $10,000. Like, wait a minute, it was just like $200, and then there was a whole industry around it. But literally there was like a 6-year span where I didn't even hear anything about it. So anyway, but coin itself, the fact that they could go bankrupt, even though they say they're not going to go bankrupt, but all the coin holders are out. They're right. There's no SEC. It's not regulated. It just is what it is. So it's a bit of a Wild West. So people are going to have to figure that one out. But, it's, again, I don't get it. So stuff that I really don't get, I just try to stay away from, to be quite honest with you.
Stick with simple stuff like term structure of the VIX, if you ask me.
Yeah.
Next,
something that's somewhat has some mathematics involved in it that I can somewhat understand.
Exactly. Next, we got AMD at 352,000 contracts. We got Rivian post earnings at 372,000 contracts. NVIDIA at 418,000 contracts. We got AMC at 664,000 contracts. And we have Tesla, 1.21 million contracts on the day. So what's interesting to me is that you have 2 Elon Musk companies in the top 10. And with Coinbase, just the fact that he's so involved with Bitcoin, you kind of have 3 Elon Musk companies kind of in the top 10. With Tesla, what do you guys do? Are you guys doing anything with Tesla these days?
Tesla's kind of the same thing. We're just looking for a revaluation. So where is it? $700. So I'm looking at just put flies, downside put flies, basically. That's it. Nothing, because it's all these things are getting revalued or let's just call them properly valued. So, Tesla went up 100-fold or some insane amount from 2020 to the end of 2021, if I recall. So, they split it once, then they got in the S&P 500, and then I'm just saying I think there was a lot of short interest in Tesla, and they got run over, and that helped contribute to some of the pricing. But it's only from 1,200 to 800, so it's off $400. So it's off 33% from the highs. But it can easily be $100 or $200 stock, and it still would be actually fairly, pretty have a value, even at that level, right? So again, I hate going back to fundamentals, but that's how usually things get back to. So probably like at $200, it would be a $200 billion company at that point, $250 billion company. And it would be like a 30 or 40 PE. So again, is it possible for it to get there? Yeah. Do I think it's going to get there tomorrow? No, but I think, probably still having this valuation slowly chop as people just kind of get out of it, is not unrealistic. So I can see it getting down to kind of one of those lower levels without too much trouble. But it just depends on what the market decides, to give a multiple to these stocks. They gave Tesla a pretty huge multiple because, of growth, and, they're profitable now. Everybody thought they were going to go to business. Clearly they did not. They have actual cash on the books now. And they have actually fairly big revenue. I mean, he built a $60 billion a year company in revenue. So, I don't short Elon Musk, but I think everybody just piled into the stock just like they did Amazon, and I think Nvidia, when Nvidia was $300 after it split. Just these multiples got extremely, extremely high. It doesn't mean the companies aren't good, but man, you're paying a ton for the company at that point. So I just think these multiples are going to come back to earth at some point, and then they'll probably be worth buying again. But still, I just still think there's a little bit, every day you see them kind of slipping down $4, $5, $8, $6. It's just they haven't found any kind of a floor yet, and people are going to start looking, to put money in other places, like companies that pay dividends and stuff like that. So it's going to be a slow unwind process. Maybe it'll be fast. Maybe it'll be over in a couple months. Who knows? But it certainly started in 2022 and it hasn't ended yet. I would say there's not an end to it yet. So if you're sitting there looking at Nvidia like it's going to go back to $300, I'm just going to say not this year. Not this year, because it still has a 43 PE at $160. And for a chip company, that's pretty enormous. So doesn't mean it's not a great company, and it's not doing great stuff. But, you have to be realistic. It's got $26 billion in revenue, and it's got a $400 billion market cap. So that's a pretty huge number, just from a value point of view. So, all of these names are going to suffer the same problem. But, the thing is, I think people don't learn either, because AMC is on number 3 on the list, right? Which was kind of one of the original, Wall Street bets kind of meme stocks, right? And it's still a year and a half later, it's still number 3 on the volume list. The stock is $10 though, not 50, but
a slight difference there.
It's a little difference, but hey, it's still garnering 600,000 contracts a day, which is still a pretty big number. So I mean, it's only being dwarfed by Tesla and Apple. So it's a pretty, and what I can't believe is that AMC is going to pay a dividend. This is what's kind of blowing me away. How they could potentially even think about paying a dividend is sort of beyond me. But anyway, we'll see if they actually make a dividend payment. But I was seeing a projected dividend at LiveWall, so I was a little shocked by that.
Interesting.
Yeah.
And then our last one of the day is, of course, Apple, the fruit company. And Apple's been down a little bit lately. So, I mean, if there is, you had mentioned that if there is a company that might be able to keep a higher multiple, you think it might be Apple. I mean, what are some thoughts on that?
I think it could keep a multiple in the high teens. It has over time has had huge drawdowns in value. I remember, the last really huge one was 2018, pre-split. And that it literally got down to like 9 times earnings or 8 times earnings. So it really can, when the market doesn't like it, they really can sell it off, because they're always the worry is like, okay, the iPhone's their last product. Nobody's ever going to buy iPhones, blah, 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 blah. But somehow they find a way to kind of sell stuff. It was funny. I was just talking with Mark. I mean, they're doing stock buybacks at crazy prices. So they've burned a lot of cash really for no reason. I don't think that was very smart. They pay a dividend. But again, they kind of went through their cash in, I don't think, a very useful way, especially buying back stock. It's like, why companies buy back stock is beyond my comprehension, to be quite honest. Just pay a dividend and not be stuck with the loss on the shares. But maybe they think it can go back up, but yeah, the PE on Apple's like almost 24. You could still see. I mean, the only place I care about buying Apple again is $100. So that gives you an idea where I think it can go. So I think it'll be a long, slow grind on the stock, but it definitely can get back there because historically it has several times.
Yeah, Apple likes to move around a lot. There's no doubt about that. And speaking of moving around, let's move on to some things that could appear somewhat odd on the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block, the section of the show where I hit mute typically and enjoy an Italian beef from Portillo's, but today is not that day. I get to talk today, and I'm pretty excited about that. We get to dissect the things that kind of make you scratch your head a little bit with the paper that's going on. First one we are going to discuss is ticker symbol CIM, Chimera Investment Corporation. It's an internally managed REIT, real estate investment trust, founded in 2007, located in New York City. Their primary investment focus is residential mortgage loans, asset securitization, as well as mortgage-related securities. So today, paper traded, we had over almost 11,000 September 22 8 puts go up for 39 cents. And then with that, I guess with what we're seeing on here, we have earnings coming up on August 3rd, before the open, of course. And that's one thing. And there's even an and in the show notes to where we have over 9,000 Sep 22 8 puts also trading at 40 cents, I guess a penny above it, that also went up. And so on here, there's somebody that apparently is buying a lot of puts here. Any thoughts on this one, Andrew?
This is always one of those weird, and I still don't understand what these companies do. They borrow money and they buy residential mortgage-backed securities, right? Like they play some kind of, I guess it's a float or a carry trade or something like that.
So they borrow money to purchase more borrowed money.
I think so. I'm not, because I traded this stock like this, NLY, Annaly Finance, which is still around, so that's 25 years later, still trading. So I guess you make money. It's kind of one of these, anyway, it is an odd business that maybe it's their whole business is just to buy more mortgage-backed securities. So, but this is another one where like all the numbers are weird. Like, so they have the book value is $16, right? But it's a $9 stock, and somebody is buying 20,000 of the 8 puts before earnings. So, I mean, is this a bet that the mortgage-backed security market is going to crack? And they're, basically buying this, thinking the stock goes to zero. That is a possibility. It does pay a pretty good dividend. It's been paying a dividend for a long time, about $1.60, so well over 10% as far as dividends go, which is usually why you buy these things. But I mean, right now it just kind of has the look of ugly written all over its face a little bit. It feels like so. I'm just looking at this like, it does make money. It does pay dividends. So I guess the carry trade works pretty well. So it's like a head scratcher as to why they think all of a sudden that, a mortgage-backed security company that survived, again, or they're thinking they're going to cut their dividend payment. I guess that's another thing because they did cut the dividend payment into the COVID thing quite a bit. It used to pay 50 cents a share. and they've been slowly raising it again. So it could easily be like, hey, I want to buy the stock, but they're also going to buy the puts, because the put cost is only 1 quarter's worth of dividends, right? So if a dividend is 33 cents and they're spending 40 cents on the put, they could buy the stock and only burn 1 quarter's worth of dividends, but have some protection on their event. So I don't see stock going up with this. I am looking though right now, but I could see how it could be a potential put in stock play in this one. So it is but the puts were definitely trading near on the ask. So, and I don't see any markers with it for stock. So I'd have to look a little more to see if they bought. I could see it as a put in stock play, but if you're buying just for straight puts, they're basically, they're looking for the worst to happen in this company for sure.
Yeah, I would think so too. And I mean, it's also possible that maybe someone already held the stock and they wanted to hedge something that they've already had. Next, moving on, we have MFA Financial. MFA is trading just north of $13 a share, and paper went up for 10,000 contracts of the October 11 puts at 64 cents. 10,000, that's a lot of contracts for a stock like that. Earnings are coming out on August 4th. Similar scenario, someone pretty bearish on this, or what are your thoughts on MFA, all these puts?
Well, it has a similar ring to it, right? MFA, aren't they a mortgage-backed security company as well? Let me see here. I have to make sure. Are they a student loan? I was trying to think of what this one. Yes, MFA Financial, and they are engaged in the business of investing on a leverage basis in residential mortgage assets.
That does sound familiar.
It does have a ring.
Similar earnings date, similar stocks.
Yeah, paying up. Again, they're paying 60 cents here. The dividend in MFA is much smaller, though, only 11 cents. So, are they buying puts in stock, or are they just buying the puts? What are they doing? This company has been around as well for a little bit, and there's a pattern of paying dividends. So again, I never figured exactly how all these companies just magically make this money, because they have to manage the risk of the mortgage-backed security portfolio. But they're buying these puts, and the puts are 65.75. So the rule. The first day you buy them and you're up money, you're looking pretty good. So I think this is a similar type of trade. Maybe hedging some stock portfolio, but it's, definitely they are, if they don't think the stock is going down, which is more likely, they certainly think it might. Let's put it that way. So they're spending big money on these puts, no question about it.
No doubt. 64 cents, theoretical value, roughly a dime above it. They definitely want to have that protection in place or have that speculation in place, whatever the case may be. Next, we move to AON. 3,000 June 22, 310 calls went up at $1.32. It actually below the bid of $1.45. AON right now is trading roughly $2.76, it looks like, and they have earnings coming up on July 29th.
Okay, so AON, an insurance company, I believe. Yep, insurance company. Let's see here. They have it's another big dividend company, but it's $273. What did they do here? They sold some calls through the bid. So normally when you see that, it does kind of feel like a buy right. So they're getting there. So clearly don't think much is going to happen. That the stock is going to see 300 again. So this looks like just a call right to me, where they feel like they have some free money up above 300, because I think the high of the stock.
Could this be a Ferrari trade?
I I think it's a little more than a Ferrari 3000 for a 1.3. So it's a little more. It's about, what is that, $500,000 in premium, something like that. So I think this is a little more than a Ferrari, right? But it would be a nice one. But I think you have to own the stock first on this one. So as usual, I think they just before the Ferrari trades, they just whack the puts out, and go spend the money on a Ferrari. So this is, but it is of that vein because it looks like it would be very hard for Aon to get back to $310. I just don't see that happening.
Got it. And then our final one for the odd block, we have a company that it's definitely been talked about a little bit lately, AMC. The 2700 AMC May 22nd or May 13th expiration. Sorry, I got to get my tongue out of my tongue keeps getting twisted. The 10 half calls went up for 31 cents. With that, we have earnings coming up in August on the 9th. And has AMC traded any options lately, Andrew? Have you noticed anything in that by chance in the last year or two?
Well, as we said, it is the top 3 option trader still, yes. Even as a $10 stock. Everybody just hopes springs eternal, like, oh, it's going back to 20, it's going back to 30, it's going back to wherever. So, yeah, it could absolutely make money. Or let's just say these 10 and a half calls could make money, but I think they're a little, what are they? Aren't they expiring tomorrow?
Yeah, tomorrow. So they better make money quick.
Yeah. So, I mean, they're 10 and a half. Well, they're up money today. They paid 31 cents. So they might've had a scoop du jour. So as of right now, they're looking pretty good, but tomorrow they're going to be parity for sure. So if they have their druthers, they're probably getting out of them by the end of today at some point.
Got it. Well, we have our druthers on this show, and my druthers dictate that we need to go to the mail block next. So let's look at some mail.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, the Mail Block. This is one of my favorite parts of the show. This is when we get to interact with the most important people of this show, the people that actually listen to this show, our listeners. First off, we want to pay off our question of the week, as suggested by Russell Rhodes. Many of you are in cash right now, looking to either BTFD, which means buy the dip. We'll leave it to your imagination what the F stands for, in SPX, SPY. But how low do we go before you have to pull the trigger? Quite simply, where do you plan to start buying again in the S&P 500? Around here, and this kind of shows how you kind of have to update the polls quite a bit in this market. 4,000 is what around here is, but it's really not around here because we're not around there anymore. Here is now there. Next support, 3,700. Pre-pandemic of 3,375, or look out below at something below 3,000. Andrew, what are you looking at, and what do you think our audience is picking in this?
Let's see here. Our question here is, I have to say, I think we're kind of going to, I think the audience is saying next support 3,700, and that's kind of where that's where I'm looking. So I'm kind of seeing that number.
I can see that. And since I don't have all the fancy bells and whistles that Mark has, I don't know what the audience is saying, but the audience will say what they say, and they'll do a good job of it, as they always do. So from there, I could see that too, because not only is that a support level, but that's also the level of around the level where we closed 2020 at. And so I think that can also act as a key number from that standpoint. And we just kind of went straight up to the 4,000 level. So I could definitely see that as a buy-in point. Don't get me wrong. I'd prefer we go up 1,000 points tomorrow in the S&P, but not thinking that's going to happen as of yet. So definitely that's become a very popular level with where we are. And we'll see what the audience has to say. All right. So Eric, a little show love from Eric. Hey guys, I've been checking you out and really enjoy your stuff. Just sharing a little love. Well, thank you, Eric. Really appreciate that. Next question we have is from Aaron. Hello, I really love your shows. The OBC and TWIFO are my favorites. And I have to say I like TWIFO a lot too, because it reminds me of my youth of watching This Week in Baseball a lot too. I really like it, and it's always been fun being on the show, and it's a good show. I've learned so much from it over the years. Can you explain how to use butterflies appropriately? Should I be waiting until it comes right down to expiration or closing out earlier? And what kind of profit target do you see professional traders using? Finally, I fear I'm setting my wings too shallow. Is there any rule of thumb around how wide to set the width of the butterfly wings? Take SPY, for example. Is 5 wide on either side too slim? Thank you very much.
Wow, that's quite a question.
Aaron loves his butterflies. And so, how do you guys usually look at butterflies when you're teaching your students? Do you like to, and let's say you're using like a directional butterfly. I'm not sure if you were looking to be neutral or directional on this, Aaron, but let's just say that Andrew wants to buy the dip right now, and he wants to use a butterfly because the VIX is so darn high, and maybe do an out-of-the-money call butterfly. I mean, how would you set something up like that?
So first thing I teach my students when they get a little more advanced is that, the basic butterfly setup, generally you want them as wide as the straddle as the term that you're trading. So, if you're trading, if you're looking at, the May 20 and the May 20 in SPX, let's see here, what's that straddle with? So SPX May 20 fly is $150 right now, right around $160 for next week. Wow, they're really jacking them all. So it's $160 for next week. So that means if you want to fly that you can close early, you want to have the width of the butterfly wings to be at least 160 points wide. The closer you make the butterfly, if you kind of squish the fly down, it's very hard to get any kind of an early close out of the fly. And if you think about it, just kind of how the fly is set up, right? The straddle is basically the market's kind of, it's not exactly a standard deviation, but you get the idea of how much the market is expecting, on a high confidence basis, how much the market thinks the underlying is going to move during that period of time. So the fly, you're trying to grab some sort of protection for a short straddle. So you need to keep that movement, right? You have to have it wide enough when the market moves, you can get some action inside the fly, meaning the short sides compress a little bit and the long part near the money makes you some money. So you have to set the fly out like that first. That's the basic fly setup. And then as you get a little more advanced, you decide how you want your fly to pay you. So, is it a directional butterfly? Am I going to make money from implied vol coming in? Am I going to make money from change in skew? Or am I trying to create like what I would call a heavy theta positive fly? And this is all fly wonkiness, but that's the way I think about it. So, because one of those 4 things will drive your success in the fly. And then again, going back to like an easy way to think about it is, flies make the most money when it goes to the short strike. So you have to have some kind of outlook that you're going to move to that short strike at some point. So if you actually want it to become a money-making thing, you have to make sure the fly performs at your target price. But once you get to that target price, which is generally the short strike, you want to get out. So if you set your flies too wide or not wide enough, you'll never see any money from it until literally the last day of expiration. So right now, if you're looking at SPY, a $5 is a $5 wide fly too slim. I would say even like right now, a one-day straddle in the SPY is $5. So a $5 wide straddle might only be good for like a weekly option, but after that, you're going to want to go wider. So like recently, I just closed a 15-point wide SPY fly at the beginning of the week. So it was a put fly. So you have to kind of take, you have to there is a way to set them up because there's a mathematics behind how flies perform. And then once you understand that, of course, that's what we do for business, to teach people how to do that. You can see how your fly will perform like that. So there is a lot that goes in it. But once you have some basic setup stuff, you can kind of get on your way. So I gave you 2 good hints about, 1, straddle width, and number 2, you got to aim for that short strike as a profit target.
Got it. And if you want to learn more about that, that's what the boys at Option Pit teach you. They actually teach you some stuff over there, and they do a pretty good job of it. All right, we got time for one more question. This is from Jim. Jim asks us, is it too late to buy protection in SPY right now? I'm thinking pretty basic. 1 month, 5% out of the money. Is that even worth doing now? If not, how do the hosts prefer to hedge right now? I'll let you start on this, Andrew, because I know I have a couple thoughts on this.
Yeah, it's like the same thing that I just said. I think vol will be lower, longer term, like June or beyond. So I'm buying puts and VIX then, and I'm buying puts in the SPY against it, basically till the end of the month. So I don't like, when the vol's this high, I don't want to buy too long a term. They're just too expensive. So generally, the higher the vol is, the closer in term time that you want to actually make the put work out. So, and then if everything kind of calms down, I figure the VIX will come in and my VIX puts will pay. So one of the two should pay. But generally, I think, short SPY is relatively short term now. I'm not going past May 31st. But my VIX is definitely longer term, in case the vol situation finally changes. So that's how I put that trade on.
Got it. Very good. I know with what I'm looking at right now, I have 2 sections of equity exposure that I like to look at, kind of a hedged equity section to where I'm either doing kind of a simulated index concept or maybe buying some puts or put spreads on the market itself. And then the buy and hold section. The buy and hold section of mine and client portfolios, I'm buying and holding. And that's what buy and hold means. You buy and you hold. Whereas in the hedged equity section, I think it would be very difficult to get in right now if you want to truly have hedged equity. I think that if I had to get into hedged equity right now, I would almost consider just buying and then buying a put spread, just because the markets are so darn high right now in terms of volatility, my opinion that it's high. And if the market were to go down lower and blow past my put spread, I would say, okay, then that's money we're moving over to buy and hold for the time being. If I had someone coming in that wanted to have some type of equity hedge, that's probably how I would do it, quite frankly. And there's other people doing different things different ways that we're going to keep watching for on Around the Block coming up in a minute.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, the end of the show. It has to come to an end, unfortunately, but fear not. We will be back next week with Mr. Longo back in the hot seat. Andrew, we got a lot going on. What are you looking at right now? What are you watching for the weekend?
Well, Fed missives. I guess Biden spoke about inflation on Tuesday or Wednesday, but I don't think it changed very much. You're always looking at this Russia-Ukraine thing. Does it get worse? Does it get better? That kind of stuff. So, but like I said, I just seeing multiple compression. The Fed is getting out of the market. Hopefully, I just hope they stay out. They're going to stay the course, combat inflation, do what they're supposed to, and not try to, nickel and dime all this stuff. So that's kind of what I'm looking for here.
Got it. We'll see if that happens. I know what I'm looking at right now. Just watching the headlines, we do have a Russia-Ukraine thing going on right now. We have interest rates. There's a lot happening right now, and we're in a 50-point down day in the S&P, and it doesn't really feel quite that bad considering what we've had. It kind of feels kind of normal, I guess. So just kind of watching that and finger on the trigger. I might be rolling down another put spread. We'll see where that goes. So that's what I'm watching. And Andrew, If our listeners want to learn more about how to set up butterflies, where can they go? What can they do?
They can go to optionpit.com, trade 888-TRADE-01, call, ask for Ted. And if you say, hey, I heard on the show, you get 10% off any of our mentoring products. So you can go put your option learning on.
Got it. And if you're looking for a financial advisor who works in the option space, if it's appropriate for the client, of course, feel free to reach out to me. You can check out my YouTube channel, type in St. Charles Wealth Management. You can follow me on Twitter at Mike TOSAW, TOSAW, or you can check out my website, stcharleswealth.com. I'd like to thank everybody for listening today. It's been a ton of fun, but it has been a lot of work. Being in the hot seat is no joke whatsoever. But understand also that we'll be back. I will not be, but the network will be back at 1:30 Central today, about a half hour from right now, for This Week in Futures Options. Thank you for listening, everybody. It has been a ton of fun. Have a great weekend.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.